Hey there, Mad Money viewers. It's another wild day on Wall Street, and we're kicking things off with a look at the Dow Jones Industrial Average. Futures are flashing red this morning, folks. That's right, they're down, and it's signaling a potential drop as we head into the trading day. Now, why the gloomy outlook? Well, investors are still chewing on a mixed bag of corporate earnings. Plus, we've got some economic data coming out that's got folks a little jittery. Remember, the market hates uncertainty, and right now, there's a whole lot of it floating around. But hold your horses because we're just getting started. We'll break down the biggest market movers, dissect the latest economic reports, and try to make sense of this crazy market. So buckle up, because it's going to be a bumpy ride. Earnings season is in full swing and we're seeing some big names take center stage. Ford just announced their latest quarterly results. And let's just say, investors aren't loving it. The automaker missed earnings estimates, sending their stock tumbling in pre-market trading. Supply chain issues and rising costs are putting the squeeze on profits, and Wall Street is hitting the panic button. But hey, it's not all doom and gloom. McDonald's, the Golden Arches themselves, also reported earnings, and they managed to beat expectations. That's right, people are still craving those Big Macs, even with inflation biting into their wallets. Their stock is up slightly in pre-market trading, proving that even in uncertain times, a strong brand and a loyal customer base can make all the difference. The takeaway here is simple: earnings matter. Companies need to deliver, or they'll face the wrath of the market. So keep your eyes peeled for more earnings reports this week because they'll be driving the market's direction. Alright, let's take a step back and look at the bigger picture. The Dow might be signaling a down day, but the other major indexes are telling a slightly different story. The Nasdaq-100 and the S&P 500 are also down, but only slightly. It's a mixed bag out there, folks, and that's what makes this market so tough to read. What's more, we're seeing some real internal conflict within the market itself. Small cap stocks, those little guys that are supposed to be a barometer for economic growth, are getting absolutely hammered. They're down significantly more than their large cap counterparts, suggesting that investors are getting nervous about the economy's prospects. So what does it all mean? Honestly, it's anyone's guess. We've got conflicting signals, internal struggles, and a whole lot of uncertainty. Welcome to the stock market, folks, where up is down, black is white, and the only sure thing is that nothing is ever certain. Section 4, Big versus Small. A tale of two markets. Let's dive a little deeper into this battle between small cap and large cap stocks. It's like David and Goliath out there, but in this case, Goliath is winning by a landslide. Large cap companies with their global reach and diversified businesses are seen as a safe haven in times of economic turmoil. Small cap companies, on the other hand, are often more domestically focused and vulnerable to economic slowdowns. When investors get spooked, they tend to flee to the perceived safety of mega-cap stocks, leaving the little guys behind. This divergence between small and large caps is a worrying sign for the market. It suggests that investors are losing faith in the ability of smaller companies to weather the storm. And if small businesses start to struggle, the entire economy could feel the pain. Section 5, Jobs everywhere. Deciphering the latest numbers. Speaking of the economy, let's talk about jobs. The latest U.S. job openings report just came out and it's got everyone talking. The number of job openings unexpectedly fell, signaling a potential slowdown in the labor market. Now on the surface, fewer job openings might seem like a bad thing. But hold on, because it's not that simple. A slight cooling in the labor market could actually be what the doctor ordered. The Federal Reserve has been aggressively raising interest rates to combat inflation, and a red-hot job market is only adding fuel to the fire. A more moderate pace of job growth could help to ease inflationary pressures, giving the Fed some breathing room. So while a drop in job openings might not sound great at first, it could be a sign that the Fed's medicine is starting to work. Section 6. Housing hiccups. Prices soar as affordability shrinks. Finally, let's talk about housing. The Case-Shiller Home Price Indexes, a key gauge of U.S. home prices, just hit another record high. That's right, folks. Home prices are still going up. But here's the catch. Mortgage rates are also climbing, making it more expensive than ever to buy a home. This perfect storm of rising prices and higher rates is pushing homeownership out of reach for many Americans. And while some experts believe that the housing market is finally starting to cool off, others warn that we're in for a bumpy ride. So what's the bottom line? The stock market is a roller coaster right now, and there are no easy answers. But by staying informed, keeping a cool head, and remembering to buy low and sell high, or is it the other way around, we can navigate these choppy waters and come out ahead.